There are, of course, plenty of dividend stocks out there, but that doesn't necessarily mean that most of them are any good. Today, we're going to be looking at specifically 3 high-yield dividend stocks. Now, in my opinion, there's a difference between dividend-centric stocks. Maybe you get 3 to 4% yield, and then higher yield, which is above 5. That's how I categorize it. So all these stocks today are going to be above a 5% yield and should generally yield above 5% on any given year as well. The first one we're looking at is Main Street Capital. They are a pretty popular high yield stock. They're a smaller company, actually about $5 billion, but they return, well, at least this year, they've returned about 7%. Generally, they do a special dividend, which is just, hey, we made this much more than we were expecting to this year. So on a poor year, maybe like during a COVID year or the first couple of years after COVID, you would expect on a poor year to get about 5% yield. Maybe on a decent year, like an average, above average year, maybe 7, and then maybe on a phenomenal year, you'd get closer to 9. But generally, you can expect this stock to be a higher 6 to 7% every year. This is a stock that's going to perform well in that high yield category. It's a little bit on the riskier side because they do a lot of investing into smaller companies. That's what they do. They just give investing and funding to companies, small. So like maybe in that $30 to $300 million evaluation. So there's some risk with that. Certainly on a really poor year, maybe a lot of those companies go under. It might not be very well, but this is a company that, in my opinion, is one of the better high yield ones, and they have a long track record of performing pretty exceptionally well. Next one is Kraft Heinz. They do a lot of products, Kraft Heinz company, Kraft ketchup, Heinz ketchup, Kraft mac and cheese, things like that. So traditional consumer goods. So you're never going to do phenomenal with this. Like something like Main Street probably has a higher top end, but it's also pretty safe. Certainly in a recession, this is another good recession hedge company in the sense that the underlying business is going to do good during a recession. Now, of course, if there's a really dramatic recession, the stock is going to fall because all stocks do during a recession. Traders are selling, things like that. But this is a company that's going to do good when times are pretty tough. Now, the only thing that is a little bit not great is we can see, okay, since 2015, they're down quite dramatically, and that's not good. You would expect it to at least go flat like it has the last 5 years. A lot of the brands, you've seen it. If you shop at Walmart or something like that, Great Value brand is competing with something like a lot of the brands Kraft Heinz has because they're just cheaper. They're right next to it. They're self-space. So there is some competition there, but I think a lot of that is priced in and has kind of been felt at this point. Now, long-term can only tell that. So Kraft Heinz maybe is slightly riskier. Maybe there's not a crazy high reward. However, even if they can turn things around a little bit and grow instead of, they're doing fine, but like instead of going sideways, they grow a little bit. That you would have quite a bit of upside, but you do have to have some caution with, okay, this is a company that over the last 10 years really hasn't performed too great outside of the dividend it pays. And the last company we're looking at is Vici. I've covered it in one of these videos before just because I love it so much. And you got to get a couple REITs in there, right? Vici is a very, very good performing stock. They have, since, what were they, IPO 2018. So they haven't been around as forever. You would prefer to have a little bit of a longer track record. I love how it froze, but we're going to keep on. So Vici, they own a lot of land in Las Vegas and things like that. Some like resort land as well, I believe. And they have a yield right under 6%. And they've performed well in terms of share price since IPO. Like I said, we're up. You can probably expect them to slightly underperform inflation, maybe over the long term. Overperform, obviously, the last 5 years, it's slightly underperformed inflation. This has been one of the largest inflationary periods in the United States. So I think with Maine, you can expect as well. Kraft Heinz, you probably won't expect it to, but Vici, you can probably expect it to right about perform with inflation over the long term. And they've done a good job of managing the company, getting rates locked in low. Of course, that's not forever, but rates seem to be dropping now. And I think Vici is going to continue to do well. I think it's going to be one of the better performing REITs over the long term. I personally own this stock. I think it's going to keep doing well. Of course, it's going to only perform as well as, you would expect a REIT-dividend stock to perform. Obviously, growth stocks are probably going to outperform that, but diversification is key to most, at least my portfolio. So you guys can do whatever you want, but if you're watching this video, you probably are looking for some decent diversification, or you really like dividend stocks. But all these are really solid dividend stocks over the long term. Of course, non-investment advice. You guys do what you want with your own money. I'm not telling you what to do, but these are companies that I like in the high yield dividend category, and I don't think are too incredibly risky either. Maybe Kraft Heinz a little bit, maybe each of them have their own risks for specific reasons. Maybe it's for the industry they're in. But anyways, that's all I've really got for this video, guys. If you enjoyed, I appreciate if you like or subscribe. I do daily stock content on this channel. Everything from deeper dives into companies, which are longer, or kind of compilation videos like these. But I appreciate all of you for watching, and I'll catch you next time.